technical difficulties. Please stand by.
Hey, good morning, good morning. Man, look at where the daily is. We're all the way up by 35.53 right now. And daily skyrocketing, guys. So I'm thinking about a potential buy here on gold. Oh, I had to sneeze. Had to sneeze. Let's see if we can get a continuation here. Now with the London session that's opened. See if we can get some volume. Hopefully we can get some volume for a London session. You know what I realized, man? Like these moves, these moves that are playing out to the upside, they're for the most part happening either the Asia session or 2 hours into the New York session. Man, it's crazy. It's crazy. We're not feeling it here in the pre-London, London, and pre-NY. So it's like really hard to catch these unless you're on the charts for really long. But man, I don't like the idea of being a slave to the market just to catch a move like that. Because there are going to be so many more moves, you know, in your trading career, you're going to have so many more moves. But yeah, it is kind of sad. I wish it was happening at pre-London or even pre-NY would have been nice. Whoever's trading those sessions, man, you're going to have really nice probabilities, especially that second hourly candlestick opening in the New York time. That's the one that usually follows through. Ernest, thank you for the sub. Make sure your biceps today shit got real. Yeah, Mr. Rashid, now we're going to fight the market. Man, yesterday I picked such a big fight with the market. You know, like after stream I took another buy, and that was another losing trade. I lost like 3 times back to back yesterday. But you know, the important thing is managing risk, you know, because remember how we managed risk on stream on these 2 trades? And then still on the 3rd trade, since I was already down for the day, I was like, okay, you know, obviously we're going to reduce risk. That's why, man, losing days, you're always going to get a higher probability of losing trades. So that's why you always got to manage risk on losing days. Yeah, man, like this morning I almost lost as well. This morning, man, like I took a sell over here, and then this candle, you see this 5-minute candlestick, it just started pulling up, and I was like, damn. Took a sell, it pulled up quite a bit. But then, you know, in the end, it kind of rushed down. It kind of rushed down for us, which is good. Oh, that's a 1 minute. Sorry, my bad. Yeah, this 5-minute here. That's the one that was pulling up. I was like, man, when was the last time I took 4 back-to-back losses? Can't even remember. But we are still strong. We're still going strong. Have not yet hit a 4 losing streak yet. Today was the closest it got, but yes, sir, we remain on top here. So now I'm looking for a buy. And for the London session, I was doing some financing or some accounting, and man, this London session is actually costing me a bit of money. So what I'm going to do is I'm going to, for the sake of the stream, still take the trades, but I'm going to manage my risk very tight. So if I get 35% of drawdown, I'm cutting that trade. 35% of drawdown, any drawdown like this, I'm cutting the trade. And then I'm going to save the rest of the position like that. Yeah, so I think it's a pretty good idea. Because usually we're not even coming this... Usually proper winning trades are not usually coming this deep into drawdown anyway. So I think it makes sense. If you just backtest and then look at your data, you can always find ways to sort of adapt or adjust to the market. So you just got to look at your data and see how previous performance has been, and then you can kind of use that to guide your trades. That's why we say risk management is discretionary, you know. Buy entry, console breakout in 5-minute, inverted head and shoulders as well. Something with this A+ textbook setup. What is a buy? You got a buy here on the 5-minute. Nice. Yeah, look at this, man. Awesome buy. Very clean textbook move. You got resistance, little bit of a head over here, inverted head and shoulders, break above, clean range. You know, the thing is, like, we haven't even gotten a setup like this yet. Like, at least during this time. This is a very nice, clean... I would love to have a trade like this, where price has retraced down in a bullish trend, and then does this, reversal confirmation signal. Man, that's awesome. That's really awesome. So I'm still waiting. I want to see what is going to happen here. Why does this look like a fake out? Current 4-hour candle does not have a bottom wick. Oh, yeah, it doesn't. True. And we got about 2 hours, 50 minutes for this candle here to close. That's kind of interesting. No bottom wick, huh? The daily hasn't had much of a movement today. I think like you see the volumes coming in here like NY time. NY time, you're getting these pushes and follow throughs. So we got this whole candle here from this whole candle here from yesterday's NY session. But you know, right now price is in like momentum. Gold may hit 3,600 to 3,900 range in the coming months. Yes, sir. We're going to see 4K by the end of the year. At least 4K. Man, crazy. I've been trying to catch these buys, and I can't even catch a freaking buy. The only trades which are playing out like beautifully for me are the counter trends. Look at how far price has already moved up. Can't catch a buy. These buys are happening at New York time. Pricing in also Asia. Today I fucked up all my trading. What's that? I go. You fucked up all your trading. Man, yesterday I was so close to tilting. I was so close to tilting yesterday. I wanted to take a fourth trade after this last trade over here. But I was like, oh man. People probably gonna think I'm going crazy. Because, you know, I'm not just trading for myself. If you're trying to copy my trades, then I think it's important to only send some kind of quality setups. So it is good. It does keep me disciplined, having a community like this. Inverted head and shoulders fakie. What are we looking at? 27. All right, so let's see if we can get my support being formed over here. I want to see if price can break above. This is basically the same setup Derek took over here. He took it on the 5-minute. He took some buys on the 5-minute. I'm taking it on the 1. That's if candlesticks can come up, if we can break these highs. I see the sellers. Looks like the sellers are struggling over here on the 5-minute, because I'm thinking, you know, if someone takes a sell here, obviously, man, it is so true. Like every time a trade gives you a hard time like this, it's usually a losing trade. You see, like these sellers here, maybe they're expecting range to continue to get filled, but you see how it's hesitating? It's hesitating for them. So I want to get in on the break of structure above here. Then I'll be expecting these sells over here to be getting whips too. Come on, stop pulling up. Pull up. Give me that inverted. Gonna remove that one there. Alright, got stuck in. Remember, I'm managing this, guys. I'm not allowing any sort of major drawdowns. I'm only gonna be looking, yep, that's it. I'm only gonna be looking for clean follow-throughs. That's it. That's the one thing I'm trying to avoid with this session. A lot of that happening. A lot of that nonsense of no follow-throughs. I will be giving it shots, but I'm not gonna be hanging around there too long. Yep, that's it. Just like I figured. Just like I figured, Goldie. You're not giving clean setups this session. No way. So it looks like it's pulling above, what's that, 35, 35, 35. Yeah, you're not giving no clean setups. So that's what I'm gonna be doing. See what time this is. All right, awesome. Save some risk. You know, it's always a good thing. Always a good thing to reduce it. If you can reduce it, trust me, it's a lot easier to make it back. I'm only gonna be sitting around for clean follow-throughs, clean distributions. Let's see, do. Yeah, nice. All right, let's see what else is going on here. So we got resistance, we got support, small little liquidity grab situation here. If history repeats itself, it should just hold this range up until pre-New York. I mean, not pre-New York, up until the New York time, and then start to move again during New York. Access BitNukes, crypto derivatives, data on TradingView. What is this? BitUnix. You know, the thing is, like, something like this usually also happens during, I think it happened already once this year. It happened once this year where the pre-London time, there was a specific time I was in the market, like there was always some kind of like fake outs or like very difficult to trade. It happened once during a pre-London this year. It's quite an annoying thing to happen. It happens from time to time, but not too often. It is annoying, but you know, what can you do? You just stick with the time that you're trading, and that's it. And it kind of irons itself out over time. It was June. We stopped also trading swing trades because of this. Started a fake out. Oh yeah, true. I remember that too. Let's say I think it can go up again from here to entry. That 200 EMA pink, if like last London, will start holding the price there. Wait, let me see what the Asia did. So we got Asia lows below here. Oh, we gotta put a line. And we got Asia highs. Oh man, look at that. Crazy. What a freaking melt. It needed to break above these highs though. It couldn't do this melt without breaking above these highs. Because for the market to move in a certain direction, you definitely need more participants in the market. Like you need some buyers in there for price to move down. So I'm not taking it too personally. I'm just looking at the market for what it is. So yeah, that makes sense, I suppose. So, you know, I think it's a good thing because a lot of people have a wrong attitude towards trading. It's like when they see something like that, they think they maybe took a bad trade or, you know, something like that. But sometimes it is just the case that the market it was going to move down anyway, but it needed more buyers to make that move downwards. No big deal. The only thing is you got to look at is managing your risk and, you know, making sure that you're adapting to whatever conditions that are currently at play. Just move that there. You got the melt? Oh, nice. Sitting on my hands for 5 hours just waiting. And remember this. Sheesh. It's like the same thing that happened this morning. We took a sell and this thing just completely nutted. Selling pressure is coming in quite heavy. I think it's because we're pretty much at the all-time highs at this point. We're all the way up over here. We tapped like 35.47. Someone mentioned the 4 hour didn't have a bottom wick, so it might be coming down to create that bottom wick. We're liquidity if this move, so yeah, and the worst thing is like people still hold this, you know, they still hold this. That's my sales done. I was in there some time ago, so it was not stress free. Oh, I see. Range, big range inside bullish momentum. Definitely when you take a buy, I was thinking should I get out? I was thinking maybe I should wait for the support to close first as I was taking that buy. But I felt pretty confident about it because the way it was setting up here. Probably should have waited for the support, but you know, it looked like a little reversal situation that happened here. Little reversal situation because it broke below support, then it consolidated a bit. Probably should have waited for this closure because I wanted to see a support get formed first. But yeah, man, I'm still trying to catch some bullish exuberance. Like usually when we're getting these follow throughs, we should just be moving up. You know, that's what I'm used to most of the time. It's like when price is moving like this, like it just keeps moving up. But the way I trade is like I trade with speed. I trade with speed and execution. So I don't like to waste time on the charts. Like if I'm supposed to be on stream or like I'm supposed to be trading right now, I'm trying to get my trades as soon as possible. The market, just like the universe, you know, it likes speed. Some people are okay with like staying on the charts for quite a long time, but that's usually mainly if your setups are not yet being formed. Then obviously you're going to be on the charts for a little bit longer. But I see no point in waiting because like the next trade, man, for me is just right around the corner anyway. So I got this London, then we got the third trade for the day, maximum 3 trades a day. And then that's it. And then just keep moving like that. You can't marry a trade too much. Because if you marry trades too much, you know, your P&L also starts to slow down as well, because, you know, it's like a lot of hesitation. There's a lot of hesitation. Your P&L doesn't get the boost. If that's what you're trying to do, at least if you're trying to boost some monthly P&L growth, then you need a lot more execution. Just like in July, man, had to execute a bunch more. You know, got about like 51 trades over here. So far in September, taken about 9 trades. But we're just on the 3rd of September. So I think it's going to be a pretty good month. If we keep up the pace like this, then it should start to clear up. M pattern is forming in the 50-minute on gold. Oh, yeah. We also got head and shoulders over here. Left shoulder, head, right shoulder. I mean, the 4 hours created the bottom wick now. Yeah, a small little bottom wick over there. Could dump. If it dumps, it's gonna dump heavy. But it's still quite risky on the sells. In my opinion, something like this, I feel like a lot of people are gonna be looking for this. So it might do like a fake move first, or like some kind of a grab before it continues to go down. But yeah, on the 30 minutes, this looks like a pretty clean head and shoulders to the downside. Maybe my problem is I'm trying to buy too much, but I'm trying to stick with the trend. I mean, there's a lot of buys. These are like 6 back-to-back buys. 7 if it wasn't for this sell this morning. Nowadays, even the bullish momentum in the market, we still got the fake out on the buy in London. Yeah, that's true. Typically, man, like typically the London actually performs quite well in these conditions. At least to give like some kind of like a tinge of a follow through, you know, something small where the London opens. Typically, so I feel like it's just sneaky the way the positions are being keyed in. You know, maybe because the New York session is like the major session, correct? It's like the major session. So it's kind of sneaky. It's like people are getting in early in the Asia time, and then it chills out for the London time, and then it kicks in again during the NY time. Because, you know, it's like Asia, you can get in early. New York session is the major session for the US dollar. So it definitely has some favoritism to those 2 times. Because, you know, at the same time, even though NY is still the major session for the US dollar, the early bird catches the worm. So, you know, like people would still be looking to get keyed in before the start of the session. Much like news, it's the same mentality with news. Usually when people expect, let's say, the NFP to go up, you might already start to see the pricing in happen before the NFP. I couldn't even, yeah. Let's see. Let's see what is going on here. I want to read this. Gold may hit 36 to 3,900. Gold could hit this range in the coming months if spot prices sustain the breach above 3,500 zone. Philip Nova's, it says in a note, an aggressive US tariff stance has raised geopolitical risk, fueling a run to safe haven investments. It's a climax of rate cut expectations, political turmoil, and heavy ETF demand has turned bullion from a tactical hedge into a strategic must-hold for many investors. See, okay, so the target is 3,800 an ounce is likely be the first clear psychological milestone beyond current highs. There's 3,800. This next one is 3,700. See if that daily can make 3,700. Oh, that's pretty big. No, that's way too big. Yeah, that's way too big. I think the daily could maybe make 3,580 if it keeps going up. See how big this previous daily was here. About 700 pips from wick to wick. So just shy of 3,600. Yeah, right now it is in a distribution. Breaking above wick highs. Solid volume coming in. Could be a similar thing like yesterday, because also yesterday this candlestick during this time, if you all remember, this candle here was a bearish. It's kind of bearish. It was like a doji candle, and then it started flipping later on in the day. It's probably going to be the same situation. Yeah, 4 hour has the bottom wick. Got about 2 hours, 30 minutes for 4 hour closure. Maybe get like a small little wick fill situation over here. But I realized something. If we stick to one position, for example, in this time, I buy, it can give you back to back to back L. I mean, need to be... Oh, yeah, that's true. Yeah, that is very true. That is very true, sir. That was a nice push up though after this liquidity grab to the lows. I was surprised, honestly, price push like that. But these are my favorite type of trades where you have that chance to get you get take profit slip. Yes, nice little take profit slip on the pushes. Let me see if this one plays through. It's breaking above 35. What is that? 30, 35, 31. With now the hourly, the 4 hour also creating the lows. Let's see what happens here. Are we gonna move up or are we gonna move down? Gonna move up, gonna move down. I married a trade, now I'm stuck. I guess this one is a little bit nicer because of the pullback and the 4 hour coming down. See, that's what I mean. Your good trades, they don't give you a hard time. They just keep pushing up like that. That's typically how it's supposed to look. Right here. Yeah, I should have definitely waited for this candle to close that support. I think that's kind of like, maybe I made like small little error over here. Should have waited for candlestick to close. Yeah, I think that's what it was. Because I wanted to see this at least like inverted. Inverted here and here and here. But this one was still open. Oh well. Get the next one. You know, these moves that happen so often. That's the thing. It's like, it's always just around the corner. You see something like this? This next move is always just around the corner. So the next one is just going to be around the corner as well. You don't want to get stuck in a situation where you're scared to execute, because that's what usually happens to people. Like, they're going to take, let's say if they take an L, then they get scared they start getting scared or fearful in terms of execution. But you should never be fearful in terms of execution. Like, trust me, like the amount of trades that I've taken even before I was on YouTube, I've taken so many trades. You know, in the grand scheme of things, it doesn't matter. It doesn't matter. You should just keep pushing forward. You know, because the more you keep pushing forward, whatever system it is that you're trading, you're gonna learn a lot about you're gonna learn about your system as well. You're gonna really understand like its performance and what it's capable of. But if you don't push it, if you don't put it through that stress test, then you're never really gonna know, because it's like you've hesitated and now you're lacking confidence, and it's like you're not pushing your system to the max. You know, that's why Mercedes-Benz looks for really good Formula 1 drivers. They're always looking for drivers who can push the car to the maximum. You know, without a driver, how are you gonna know like how good your car is? How are you gonna know? How are you gonna know what needs to be improved? You know, you need a driver who's willing to execute and really push the vehicle, so they can give you feedback on like what might need to be changed, what might need to be improved. So it's the same thing. You gotta think of your mindset like a machine that just keeps going. You can't like just get stuck. I had to go to the door doing some construction work in the house. Close my German 40 trade at BE. 3% trade gone. This would have been a nice one. This would have been a really nice. At least this one is a little bit more formed properly. Damn it. Look at it go. Beautiful. I think that's a good thing about also having a strat where it's like when you understand how your really good trades look, you understand that, man, you're gonna understand better risk management options. You see, like also, for example, Luke was in a sell here earlier on. There was also like a sell. If someone was looking for a sell, then that would have also been like a potential setup right here. And you see, man, it just goes. It just goes. Like sometimes we get the pullbacks like we did this morning. That's also fine, but as long as it doesn't do too big of pullbacks, usually those are still the good ones. Like just give you a small little pullback and then continue. I guess there you can definitely take some comfort in that, in knowing how the good positions look. Because another reason why a lot of traders they have a hard time is because they don't know how to manage their drawdowns. So every time like price would do this and then it will start coming in a drawdown, they don't know like what to do in terms of managing the drawdown. So sometimes they could get out too early and then price goes in their direction, or they just don't have enough sample sizing to not play the victim in case something happens that they didn't want to happen. So it's like, man, when you start looking at how to manage risk, the more you understand the system, the better. So if your system typically takes drawdown before moving in your direction, that is something for you to really think about. If that's like a typical thing, because some strats typically will take some drawdown before moving in certain direction. So it can become quite interesting at that point in terms of risk management. That's why I do like the setups where it's supposed to just go in your direction. And you know, man, like these concepts, we're covering them in the simulations. You know, we're also covering them in the simulations. Also, how that drawdown looks like when we get our risk management, and then how it's supposed to behave. Then a big accumulation here too. The London has not yet had any follow-throughs. I wonder if today could be the first day for a bullish continuation. You see, the London session has not had any bullish continuation. This is pre-NY. But the London just holds. It typically just holds the range until New York session kicks in. Like this. So I wonder if we can actually get a London like finally distribute. That would be interesting to see. Because that would mean maybe the pre-NY, the volume kind of shifts a bit from that New York time back into London and pre-New York. See, this is like this is actually New York session, but pre-NY it started to move up here. But London just chops up a bit more. But I wanted to become you, Vic, even better because you're not FOMO when price move after you take a loss. Yeah, man, you're gonna get even better than me because you know you're gonna have this information already. Because I didn't even have this information, so you're already ahead of me with this information, and with just the fact that you can see how it's not a big deal. Because I never had that, man. I always thought, you know, from the people I was learning, I had to always put the pieces together myself to like what really made sense for me. Up to this day, there's no one that I really look at who's trading and say like, I want to trade like this, or I want that to be my system. Like I had to find like a way markets make sense to me. Yeah, and that was my style. And since it made the most sense to me, it makes it also easier to not have FOMO, to not revenge trade, and just to understand the system much better. But you see, you're already catching like really nice moves. Like you definitely are seeing clean entries. There's a clean entries over here. That's a really good start. You know, the hardest thing in trading is, I would say, it's being perfect. The hardest thing in trading is being perfect, because like to be perfect, man, you really have to be super disciplined. Like it's very difficult to be perfect. Like, you know, for example, if you say, this happens to a lot of people, they go through, let's say, a losing streak, and they're like, okay, no, I want to only take this setup, this exact setup, this like A+ setup. Man, you'll be surprised how hard it is to get that A+ setup, even if you have a picture of it like this. Like you won't hit it 100% the same way, because the market condition, you know, all is going to be slightly different, especially with the way you trade and the way you do analysis. You could sometimes overcomplicate even an A+ setup because of another variable, which could be like, maybe it's a counter trend trade. You know, there's a lot of things which come into play which can really mess up with your psychology. So what I've seen that works for me over the years is just to take it, just keep taking your trades. Don't think about them too much. Don't get too emotionally attached to it, because you're not really competing with anybody. You're just competing with yourself. You know, it only matters to you at the end of the week how you performed, you know, at the end of the month how you performed. Not competition. It's when you compete, that's when you start getting frustrated. You know, it's like you're going to look at another guy and you're going to say, damn, this guy is doing this, like he's doing so well. That's when you start to get frustrated with yourself. You must just lock in. So you see, you already had one beautiful trade here today. That was a really good trade. You could call it a day here, or you could wait to take one more trade. And maybe on the next trade, you could keep the same risk because you're already profitable on the day. But if this was a losing trade, maybe on the next trade, depending on how big this loss is, you can reduce your risk. It's just a game of risk. That's all it is. It's just you're trying to balance the risk. Because once you get your entry models and your strategy on lock, the next thing is just to balance the risk back and forth. So you're just repeating this and making sure that this is sometimes this is gonna change a lot more, you know, based on how your day is going. So you want to lock in on the entry models, but based on how your day is going, you got to manage it with your risk back and forth. Because if that was not the case, then yesterday I would have been down. Yesterday I was down, let's say that's 2.08%. I would have been down 4.5%. You know, and that 4.5 minus 2.08. You know, I saved like 2.40%. And you know, it's like in the long run, it maybe seems like a lot now, maybe it doesn't seem like a lot to you now, but in the long run, it does add up. And it does make your trading a little bit less. It makes your trading more stress-free when you can reduce that loss. So you just balance with the risk. So for right now, I'm up on the day about like, let me see how much percent that is. I'm up about 1.2%. So on the next trade, I'm just going to take my usual 1 to 1.5% risk and just let it go. I'm just gonna let it go again to 2%. So maybe I can still end the day here with 3.6%. So we'll see. Let me ask y'all in the mentorship, should I keep sending like the TP1 and 2, or should I just do TP1 only? I don't know what the data is of people who use the TP1. That's the problem. Maybe because I'm usually closing at TP2 anyway. Let me know if anybody uses TP1. Like, do you even consider it? Do you even look at TP1? Even if like you just use TP2? The reason for TP1 is because people maybe have like different goals and they're seeing maybe something a bit differently. So it gives an option to, it's just like an option. But yeah, maybe I'm just gonna go with 2. I'll just stick with 1. I mean, sorry. I honestly think you're an actual teacher of the market and the way you trade. Man, thank you, Luke. I appreciate it. I still haven't gotten around to the link you sent me, but I'm definitely gonna get to it. When FOMC will come? FOMC should be in like about 14 days. Yeah, 14 days. We're gonna get easing of 89.7% easing in about 14 days. TP1 close half, move stops to BE. TP2 close another 30% and leave 20% runner. Wait, I think I'll just gonna start a poll here. Do you use TP1 or should... Let us know if you do changes. I will need to update my setting to not ignoring TP1. All right, let's see. I'll let you know. Let's see what the votes here say. Because some people are not on the Zoom call, you know. I think majority people are not on the Zoom call. So I'm just gonna let that run and see at the end of the day. Raul Luis, thank you for the sub. We have TP because it's a possible area to reject. If it rejects off TP1 and we haven't taken anything or moved, stops the BE, we could lose. You know, it's the reason why it's there in the first place, but to be honest, like this whole year so far, like we haven't really made, or rather I have not used the TP once. I usually send like TP1, TP2 in the signals, but I always secure a TP2. I just let the trade run, basically. Will rate reduce? Because, you know, like the trades are, the distance for price to get to it, it's very achievable, you know, it's not that far off. Like these two trades over here, they played out really nice. These ones are actually pretty clean. These had like zero drawdown inside of them. This is the one I took this morning. I got stuck in, price pulled back, and then continue to come down. Well, usually when the follow through happens, when it actually picks the direction, like TP2 is getting hit. TP2 is getting hit, like once it starts to move. Yeah, so this is becoming here a no trade zone. No trade zone. But the distribution is going to be quite big though. Because this whole range here, this is about 140 pips. 140 pip range. $14 days to rate cut. You know, the thing is that with the FOMC, because price has already moved in, this is like already priced in. So it's going to be quite interesting to see if we can continue to keep moving up parabolic like this. Because, man, look at the way price has just been moving. Just back to back to back to back. It would be insane to see FOMC just again. But that's most likely what's going to happen, though. And then we're going to look at this thing. This thing is going to look like the Eiffel Tower. You know, like this is the benefit for people who trade the higher time frames. You see how important it is to lock into the fundamentals? This is why for me, when people talk about trading higher time frames, most trading gurus, like they don't really dig into the fundamentals much. So I wonder like how they expect to catch these moves. Like these moves only happen in line with macro fundamentals. You know, it's pretty nice. It's pretty nice. If you're okay with being patient, man, that would mean like, ooh, you might have already been stuck in here. I don't know how you'd have played it. But since April to September, to August, there was nothing. Since April to August, there was nothing over here. So you see, since we topped off and then till here, there was nothing. So you have to be like really good with sitting on your hands for this duration of time. Like if you're really trying to trade the higher time frames, I would say properly, obviously there's no one way to trade. But if you're trying to trade like the dailies, the weekly, monthly distributions and so forth, that's like the time span you're going to be looking at. Then you're going to ask yourself like, how many trades then in a year are you taking if you're just focusing on one instrument like this? And you know, at the same time, these fundamentals, they affect majority of markets. You know, this is gonna the rate cuts are gonna affect the stock market. They're gonna affect a lot of other things too. So it's just like a perspective thing. It's kind of nice because if you don't really need to trade and you're kind of doing like a hobby, like a real hobby, let's say you finally got your passive income coming in, you know, trading has built you that foundation, and now you have passive income rolling in, because trading is still earned income. Like, you still have to show up onto the charts and put in the work. You know, at the end of the day, you're kind of like a wagey. You're a wagey for the market. You know, you're still a wagey. So you got to come in, put in the work, and get paid for killing what you, eating what you kill. But let's say you get everything set up. If you get everything set up and you understand macro fundamentals and you want like these really juicy plays, I think it's actually quite an enjoyable thing to really dig into macros and anticipating moves like this. Because in such a scenario, you could be looking to risk however much you want to risk. You know, whether that's 15%, something that's good for you. This is not financial advice. It's not financial advice. But, you know, something like maybe like 15%, maybe even like 10%. It's still a good return on investment if you think about it compared to other businesses. It can still be quite exponential growth within the year. You know, and I think in most cases, people are looking to buy whatever it is, like stocks, whatever it is, gold, commodities. The idea is always that price can go up. But it's only like when you're looking to sell something, I always feel that's going to require a lot more due diligence. Like, for example, people right now looking to sell Nvidia because of the infrastructure. Apparently, they have like a problem with not with demand, but with supply. So people are looking to short Nvidia based on that. But I think the smartest play is to always, oh, look, it's already selling off. It's already pulling back a little bit. But I would say the smartest play for the long term is definitely to look for dips for continuations. Then you're really making money work for you and not the other way around. You know, like how Rockefeller, what's his name? I think the Rothschild, one of the Rothschilds says, those who are always working have no time to make money. So yeah, definitely earned income trading is. But if you give yourself like 5 to 10 years of just now when you're profitable, not when you're still learning, so 5 to 10 years of profitability, I think in most cases that's when people are already slowing down on the trades. Maybe taking like one trade a week. So you take like one trade a week, then it really slows down to maybe like 15, 20 trades in a year. Love you, man. You really changed my life. I took that 200k FTMO account and now I can make my own money. Oh, let's freaking go. Tito trade. Nice one. You got this. The market is so unpredictable no matter what you think should or might happen. Yeah, that's why we're, at the end of the day, risk managers, right? That's why we manage risk at the end of the day. Actually, you know, it's like you could have the worst hit rate, but if you're a better risk manager, you will still outperform the guy with a positive risk reward. That's a beautiful thing about risk, because all right, let me show you how dynamic that risk can be. You know, this is just a quick example. Let's say you put your stop loss below here and your take profit over here. Actually, I want to ask the chat something. Let me see where your headspace is at. So let's say now this is a 1 to 5 risk to reward, correct? It's a 1 to 5 risk to reward. You've gotten in your trade with a lot size that's accounting for 1% here at these lows, right? But now what if we do something like this? And now let's say you're planning on closing your trade at 35%. Is this now a 1 to 5 risk to reward, or is it a 1 to 4 risk to reward? So write in the chat, guys. I want to see what your thoughts are on this. How would you perceive this? Would you perceive it as a 1 to 1.5, or would you perceive it as a? See, now you really gotta think. You see, that's what most people don't like to do. When it comes to risk and trading, most people don't like to think. They don't like to think. They only want the simple approach, where it's like 1 to 2, you win 50%, easy, done. But like risk is it can be so much more dynamic. That's why I mean, like, someone with a negative RR in a sense can outperform somebody with a positive RR, because they're being a bit more dynamic with their risk. So what would you guys see it as? 1 to 4? We got mainly 1 to 4. Yeah. It's just like a food for thought, you know? It's just a food for thought. Because this takes forms in different ways. You know, there's this version of it, and there's also a version of, let's say, if you have like, let's say you got a 70% probability that most time you can reduce your stop loss. So let's say you're not even using this Fibonacci, but there's a 70% chance that your trades will give you some kind of a structure that you can reduce your risk. Situation like this, now let's say that becomes a 1 to 3, but the catch is that that's always going to change. So this one is going to be more dynamic because that's based on the market, correct? Sometimes the market can pull down heavier, and then you can only save like a bit more. Then instead of 1 to 3, that's 1 to 2. And then sometimes the market can give you the best ones, you know, like where it even just hovers right on your entries. And then you could reduce from a 1 to 1.5 to even a 1 to 10 or 1 to 11. So you see now, you see how that really puts you in a very strong position when you focus on risk. Because as traders, you're not here to win. No one's here to win. Everyone's here to manage risk. Winning is a byproduct, usually, of managing risk. And that's one thing that for me personally, like, has been a learning curve for trading on YouTube. Because when I look at the YouTube mentality of traders, they're so pressured. All of them are so pressured to win that they behave in ways they wouldn't usually behave. You know, they'll get frustrated with themselves. They'll get disappointed with themselves. And you know, at the end of the day, though, they're good traders, but they're forgetting that this is what it is to be a trader, is to manage risk. It's not to win. You know, winners, if you focus too much on wins, you have to really consider how your losing trades are going to be looking like. Because usually you kind of ignore risk when it comes to wanting to win all the time. Look at this. Creating like some kind of a resistance over here. Have another range down towards support. This is like a 31.2 pip range. 31.2 pip. This is a really nice rejection zone. Like 1, 2, 3, 4 rejection wicks. Small resistance. Might be a fakie too. The way it's acting, it's looking like a fakie. Close below support. Did anyone catch Story Trade's latest video on her 250k to 90k up on XBT? Oh yeah, I did see it. I did see it as well. I did see that. That's crazy. That's basically, I don't know how much, but I didn't watch the full thing, but how much percent of the account is that? It's a big percentage of the account. That's one thing that I never do with my trading. Like I will never let, you know, right now this year I'm already up so much, but I can never even consider giving back like 15% on one trade, or even like 10%, even 5% on one trade is just insane. But that kind of drawdown, I'm sure it's ranging in between like 20 plus, maybe 30 plus, 30 plus percent. You know, the good thing is that it worked out. It worked out, and you can look back at that situation and say, man, thank God that price didn't stop me out. You know, but like you're gonna have a day eventually. You know, the problem with trading is like when you have a bad habit like that, that habit doesn't go anywhere. That habit is gonna come down the road. You know, maybe you'll survive now, but it's gonna happen again down the road. And maybe, you know, a year from now, maybe a few months from now. That's the problem. You know, it's like repetitive patterns in the market. That's why when you have like a repetitive pattern that makes you money, that's usually what you want to keep doing. Correct? Because that's going to happen over and over again. And if you have a repetitive pattern that keeps losing you money, that's going to keep happening over and over again. So it's the same thing for trader psychology. If you're allowing this massive drawdown just because you survive once is not a good thing. It's a very bad thing, because you're rewarding a bad habit that you are subconsciously, you're going to do it again in the future. Because the mind like can easily forget and get numb to such a situation and then do it again. And it's happened to you guys as well. Like, I'm sure it's happened to you all in the chat where you decided to remove the stop loss maybe one time, or you really extended your risk one time and it went back in your favor and you said you're never going to do it again, but you ended up doing it again. You know, you found yourself in that position again. So that's why it's, when you look at your trading performance, you really have to go through a lens of almost like a scientist, looking at all the possible variables that can affect your performance. You know, it all starts from your actual strategy to those little psychological things, and it's the smallest of things that you typically overlook. Smallest of things, but make the biggest of differences. Because a lot of y'all are already profitable because you know what you're doing is wrong, but you just keep doing it. So all you got to do is like stop doing that thing that you know is already wrong. And you're already going to be taking the right step in the right direction. Because, you know, like a little bit of that every day, it compounds. It compounds, and a little bit of that in a year, you become almost like a different person. Yeah, so I like those examples because it is really interesting when you dig into the psychology of traders. Like this show over here. If you still haven't watched it, make sure you watch this show. This is $1 Million Traders. This is part 1, was a British reality TV series and course created by Lex Van Dam. There, here's the boy. But watch this. I think it's really good. Because sometimes when you look at it, depending on where your journey is, because depending on where your journey is, you can, these are new traders. Some of you guys have been trading for like 1 year, 2 years. These are new traders, so you got a better perspective on some of these habits. Then maybe you're gonna see, maybe you still have some of them. And like a year or 2 from now, you shouldn't be having the same habits as novice traders. So if you watch this and you're resonating to some of that, like, sure, we can share some commonalities, but the mindset to approaching those challenges should be different. That's a pretty good show. Ooh, this thing's still running up here. Another consolidation break. I think I took my shot too early today. I was a bit excited. That's a problem with live streams. I get too excited on live streams. When I trade alone, I don't get excited. Why I'm asking, I would like to get proper mentorship. Just would like to know your strategy. Hi bro, first time coming across your channel. Do you trade breakout? Yeah, I trade breakout. Basically, this is what I trade. I'm looking to catch this. Like, this is my bread and butter trades. These little breakouts like this. I don't know, of late I've been getting kind of unlucky on stream. It kind of sucks. It kind of sucks. But you know, what can I do? I can't do anything about that. But these are the breakouts that I'm looking to catch. Like breakouts like this. That's just one of the entry models, but that's kind of the one that I'm focusing on the most. This and the shotgun plays. I've let this and the shotgun plays. Because the shotguns give very nice confluence, because shotgun entry models, they're very nice. So, you know, if you're new to the stream, you just gotta watch the stream for a little bit longer so you understand. A breakout, you already know what that is, but you don't know what a shotgun play is, or the swing entry models, or market fades. But for the most part, this year we've been mainly doing shotguns and some swings. But definitely, like, this is my favorite strategy. It's a breakout strategy, because, you know, it's like, it's really basic, but it works so beautifully, because, you know, markets move 3 directions. They move bearish, sideways, and bullish. So it's so basic, but it's like, it's very powerful. As you can see, it has these really nice distributions. Because it's like, when you're right about the trade, usually it doesn't give you too much of a hard time. Yeah, you can get some pullbacks, you know, like these kind of pullbacks like we had today. These are fine. Like, these are okay pullbacks, because it's just quick. It's just one and done, you know. It's just one and done. Those are fine. It's just the same as if it just moved in your direction. So you kind of already understand your positions a bit better. How to manage risk, how the good ones look. Because if you think about it in that case, and the examples that we gave you, people ask me what my average risk to reward is. I usually just say 1-to-1. But if we really dug into the data and like even what is possible with such a strategy like this, you could, your average risk to reward can really increase. It can really increase. Because, you know, there's ways that you can take such positions here with minimal drawdown, and just understand that you're trying to catch the most easiest moves. You know, so the sky's the limit when it comes to risk management. The sky is not the limit when it comes to reward. Reward is always like, you have no control over reward. But if you can manage the risk, then you can manipulate the reward from the back end. Even that means, even if you get in and you manage your risk, you can always scale in a position and then give yourself chances for runners. There's a lot more you can do. Man, but look at this. Candle close above resistance. Another little bit of a potential shotgun over here. But this candle does not have a bottom wick. Candle does not have a bottom wick, but it is breaking above. It is breaking above 35.38 to re-break the highs to keep moving up. And then the range over here, that's about, you know, like 34 pips. No bottom wick though. Oh, Vic, she removed her SL. Yeah, can you imagine? Can you imagine removing your SL? Like, why would you ever remove your SL? You know, why not just accept the whip? Just get the whip and move on. Removing your SL is the #1 reason people blow accounts. So for someone who's been trading 10 years to be willing to blow an account this late into the year, we only have 1 more quarter left. You know, for me, I will never hire someone like that. You know, this has nothing to go against anybody. If I was running a hedge fund, I would never hire someone like that. I would rather have this guy who's only made 1% the whole year. You know, maybe even 0.5% the whole year. Then have this other person who's made maybe 20% on the portfolio, maybe even trading clients' money because that's what hedge funds do, and then risk the entire account this late into the year. That would really piss me off. You know, because you know, it's the end of the year. What are you gonna do? It's the end of the year. But that's what happens when ego gets in the way. You end up, you know, removing stop loss, not wanting to lose, not wanting to look bad. Can be very risky. So I usually judge traders based off their losing trades, not off their winning trades. Because I've seen the power of risk management. That's why. Because I can see I can even lose 3 trades in a row and still keep my risk at a very low loss. But the people who just want to win all the time, the same 3 trades instead of 2%, let's say will be like 4 or 5%. And it's a lot more harder to make that back because you can't control the reward. You know, so that's the downfall of that approach to markets, is you never can control how far the market pushes, but you can manipulate it with risk management. DXY on our candle looks like a fat grab. Look at this little fakie over here. It didn't break above the highs. They still respected the previous candlestick highs here by 35.39. It's completely rejected it. 1 minute starting to look nice. Did I miss it? Today is not my day. So far, the accumulation breaks have all been playing out. This one could have done with a bit more structure before it broke. Maybe we're gonna come back into the gulag. This is the gulag here. Maybe till towards New York. $1,600 news. Let's see. Fundamentally, today we have. This is the third. We are having Xauusd job opening. Oh, monetary policy hearing on the pound. As well. That's gonna be the next big one. At 9:15, about an hour 15 minutes into the New York time. Then we got Xauusd job opening, 10 a.m. We're going to be well off the charts by 8 a.m. anyway. But those are the two main things driving that you got to look out for if you're going to be trading the New York time. And let's see, for Xauusd job opening, we're expecting bad numbers for the dollar. So this is looking good for gold. Gold can move up. They're expecting numbers to come out bad. I could act like a nice catalyst for gold to skyrocket later. Yep, Q4. Man, it's already... This year is already coming to a close. But the greatest, let me tell you all something. The greatest plot twist happened towards the end of the year. So if you're still learning to trade, maybe you're not yet consistent, you're still trying, Like, trust me, the best has yet to come your way. The greatest plot twist happened towards the end of the year. It happened to me in more like the beginning of the following year of my first year of trading. So like 2020, that whole year was a year of just character development. You know, more than anything else, it was just a year of character development. And then 2021, that's when plot twists were starting to happen. But trust me, like towards the end of the first year, that's a pretty good time. Or even not even if it's your first year, even if you've been trading for more, towards the end of any year, because you've already made so much progress throughout the year. You're definitely not the same person you were when you started this year. And the knowledge you've acquired from trading has immensely increased throughout the year. So you might still not be profitable, but you're definitely not at square one. You've definitely changed and improved in some ways. So that's what you want to focus on. Just focus on the positives. Focus on positives. Because I can tell you one thing that I feel confident about is what you've learned from TetraFX concepts. I'm sure it is a unique information that you may have not yet gotten anywhere else. And that in itself, it's invaluable because as traders, we operate from a point of information. So the more information you get, especially the more new information such as this, it can always improve your edge. It will always improve your edge. You know? So it's like the whole idea behind these concepts as well is to understand other concepts. It's not just so it's blocking itself in its own sort of perspective on markets, but it's derived from other people's concepts and understanding where weaknesses and strengths lie, you know, to build your own strategy, or rather to build my own strategy. So you can never do it. You can never do it without any kind of help. You know, if you think you're going to trade and you can do it yourself, then I don't think you're going to go very far. Because the more you understand about other people's approaches, the better your trading naturally becomes. It doesn't mean you have to change your strategy, but there's definitely something that you can learn from that can improve it. Yeah, now we just gotta... Let's look at these other fundamentals. Long bond yield rise. Gold hits record on fiscal concerns. Fiscal worries send super long bond yields higher. Investors await job report for Qs for US rate outlook. Dollar finds support as sterling yen under pressure. I'm sure GJ is back below 200. I haven't yet looked at GJ. Let's see, it's probably back below 200. Let's see. Oh, it's still at 200. Man, why is sterling facing so much pressure over here? Oh, we gotta look at this. A global... Wait, did they talk about it? Dollar finds support as sterling yen under pressure. Anybody living in the UK right now who understands why the economy is stagnating like this? What's happening? There are some rate cuts which are about to happen, or rate hikes actually which are about to happen, or is this due to the Japanese fundamentals? Because the government is shit? Yeah, I mean like, besides from all those other issues, in terms of what we can pinpoint, I know the government is crazy. Like, there's a lot of problems, but I think this is like something maybe to do with the yen. I think higher rates in Japan is also a major factor, as global bond markets no longer benefit from Japanese hunt for yield. It's a perfect storm for long dated bonds and headache for governments. I reckon it has something to do with because the Japanese economy wanted to hike rates. They've been looking to hiking their rates. And since the summer time, the pound is looking to cut their rates. But right now it's like trying to break above 200, but it's struggling to break. Paying 45% tax, and they're taxing us more now. Yeah, I think that's wild. But you know, at the same time, taxing people more should actually move the markets up. Anything that's bad for the people is good for the market. Higher interest rates, you know, that's good for the market. Maybe higher taxes means we can pour more money into the market. And I don't really know to what extent that's, you know, I think it's a lot more dynamic than just candles moving up. I think when you look at markets, you can't also just think just because a candle's moving up that it necessarily means something good for the economy. I'm sure there's more to it. It's not good for the pockets. You know, like crazy, like Frankfurt Open, man. Frankfurt Open is, I used to trade the Frankfurt Open, but there's not a lot of nice volume in Frankfurt Open. It's crazy that Frankfurt is it's like, you know, quite a prominent financial district. It's got a prominent financial district. But if you go to Frankfurt, man, Frankfurt is known as Crackfurt. You know, because it has so much problems with drugs. You're gonna see so many druggies on the streets in such a prominent area like that. It's insane. It's like if you go to Rome, you know, like Rome sounds nice, but if you go to Rome, these countries have like huge immigration problems. So you tend to see a lot of like homeless people. So on the ground, European countries, they do have a lot of challenges. And UK crime is going up, man. Like that's my fear of the UK, of going to the UK, is so much crime. Always hearing stories. Sure, London is quite nice though, but also dangerous. Then you never been to Hamburg? Yeah, I've never been to Hamburg. I got a friend who's in Crackfurt right now. He went there on some business. He's like, man, seeing so many druggies here. In the UK, from what I see, they even pay them apartments on four-star hotels. They get more benefit than people that work and discount. Yeah, you know the thing about those areas as well, like Crackfurt, is like the cops don't do anything for they leave those people alone. They leave those lawyers and doctors alone on the streets doing those drugs, and then if they cause a problem, the police will tell you to not disturb them. You know, it's like, it's just there for show. Like if you go to Paris, for example, there's a lot of like scams which happen on the streets. You know, the scam thing about putting a ball inside a cup and then you try and move it. So it's like, while the cops are there, the cops are just there for show, just to look like they're doing something, but they're not doing something. So if a cop comes here, the scammers go here in Paris. If the cops come here, the scammers go here. So it's like a game of cat and mouse, but they never really do anything to remove those problems from the streets, which is kind of weird. I wonder why the governments don't really put more effort towards that. Like even problems like pickpocketers, you know, a lot of pickpockets. There's a lot of pickpocketers. Those guys also get scot-free. The police know who they are, but they never touch those people. Might be some mafia or something weird. Yeah, in Rome, it's just the last few years. Exactly. It just recently it's become really bad. I went to Rome about 7 years ago. Zero problems. It's just the last few years it was amazing. Love the people. Oh, hot blood like you. In the Colosseum, I went to see end of the year fireworks. They have Metro there. They close it yearly. Then announce we're all tighter. Force open as still one. Kind of hard to read this sometimes. It was funny here, like, oh, he pushed it open. Rome has a lot of pickpockets too, huh? It's one of those places where it's really sad because they target mainly like old people. But if you're a tourist going to these countries, it's really important to definitely know I would want to know the worst things first before the nice things. Yeah, exactly. In the metro lines. Yeah, exactly, tall trader. In Rome, you have to watch your belongings in the metro lines. That's where the pickpockets are. So yeah, that is a state apparently of European countries. But when focusing on the economy, I think the major thing over here is definitely US dollar rate cuts. It has nothing to do with immigration laws in the US, none of that. Right now, we're just looking at these USD rate cuts. That's why gold is moving up. So gold is moving up. Look, we might fill up this range. It's like 35 pips. 35 pips. So it's a small real retracement into the gulag, taking out previous 5-minute lows to continue pushing up. It's quite funny because this distribution is still playing out. It hasn't yet been mitigated. You know, from this area over here. This is the one that we would have actually taken if I didn't jump the gun. But yeah, this thing is still freaking playing out. So one would have been taken. That's why I was looking at if drawdown came 35%, I would reduce it because I already know my trades. I know my good trades don't do this. They just keep going up. That's the idea. So you see, with that perspective, then it would have been a 1 to 8. But remember, you're focusing on the risk first. Even if you're risking 1% below here, you're focusing on the risk first. Don't chase the reward. You chase the reward, you're gonna get more whips. My setup for buy on GJ is forming. Have to wait for the hourly for confirmation. My English is bad. No worries, no worries. No problemo. Did exactly like yesterday. Yeah, no problem. I'm just gonna try and read anyway. But I can read it. It's not that bad. Like, I can still understand it. Your English is still better than my ability of speaking a foreign language. Did exactly like yesterday, just test the second 1-minute consolidation entry, but didn't have the courage to take it. Yeah, I mean, it tested the second entry, as you said over here. I can definitely see this. In terms of the courage, also for me to take it or not, it would not even be about courage. It would just be, I already give it a shot. I already tried, and you know, this to me now, all this other stuff here is just. It's just like, it has to move. It just has to move, you know, and then I come back later on. So you just have to set yourself really stringent rules of if you're going to execute or not execute. Because if you're going to execute, why wait for the break and retest? You should have already been looking for a buy over here. And you know, that's it. You take your trade, no hesitation, and then you move over to the next trade. You know, the worst thing you want to do is like sit around for too long. I would rather take a trade quickly and lose it and then move over to the next session. And then just be a little bit more cautious, but still be willing to execute, then sit around and miss moves. Like, that's actually what for me creates the most anxiety and holds me back the most, is when I don't execute when I know I should be executing. And then I miss the move. And I'm like, damn, I should have taken that move. Because now that starts to play on your psychology, because the next trade, you're going to think you're going to lose it. Because in theory, you should have won that previous trade, you know? That was your destiny to have won that previous trade. So now you gotta stay in the market longer, and the longer you're in the market, the more chances you give sharks in the water to take your money. So like this whole environment, man, like some people are so optimistic about it, but I'm also very cynical about this environment. Like, I just want to get in and then get out. That's it. Maybe 1, 2 trades, 3 trades a day. Get in, get out. Get in, get out. You know, don't be too optimistic about the market. Like, it is not your friend. In the long run, it will build your character. You know, some of you still need character development. It will build your character. So you know, like, even if you, that's what I'm saying, like, even if you see something like this happen, you can approach it either from a I missed out perspective or a anything could have happened perspective. You know, I think that one is better, the anything could have happened perspective, because it's true, like, this played out beautifully, that played out beautifully as well, but anything could have happened. That could have been a losing trade. You know, it could have been a losing trade too. So you just gotta give your trade space in between. So what I've been doing of late is, usually I'm on the charts by, typically I'm on the charts from this time to, but it happens quite early. My trades usually tend to come in the first hour of when I'm on the charts for pre-London. But I'm on the charts from this time to, let's say, maximum this time. And then the next time I come in is here. But I'm already, most of the time I'm already finished like a bit sooner. But this is like worst case scenario. Worst case scenario can take a bit longer. And then I come in here for, now this is the next area. This is now London, and we're in London till, by the way, this is only this long just because we're streaming. If I wasn't streaming, it would be shorter than this, but this is like, this how long we're here for the stream. Because the reason why sometimes I can even take trade maybe even 30 minutes after stream is because this one is already extended. This one should actually already be something less like this, maybe to like 5. And the idea is you just want to give yourself space. You want to give yourselves room in between your trades, so the market has a bit more time, so those hourly candles can at least close before you're considering to take the next positions. Because these hourly candles is what I'm trying to catch. You know, so like sometimes you're gonna have an hourly candle, maybe it just doesn't go anywhere. So you want to at least try and get some new fresh hourly candlesticks to open. Because those give you, each hourly candle will give you a chance to catch some kind of move. You see, if you're looking for a higher perspective, it seems like the hourly candles are not really moving too much. But on the lower time frames as an intraday trader, like, you could definitely catch some moves from this. You know, you had those sells that Luke was in earlier on, and then you had those buys that came in earlier on, and then you had the secondary buys. That was a secondary accumulation. I think it was somewhere around here that happened. That's the distribution. But if you're looking from hourly perspective, as a higher time frame trader, you're gonna see what I'm doing here, and you're gonna think that I'm just trading a range, which I am. But from a scalper's perspective, we're trying to catch these moves. We're trying to catch these distributions because we don't have fat stop losses. You know, like stop loss here, maybe about like 28 pips, but the candles are pretty big. There's a lot of volume. What are you saying exactly? Just tell me. Will it go up or go down? Well, Washington Spy, this, what you're doing right now is just going to become a, it's just going to become a memory. You know, this is something that you're going to think about a year from now. And you're going to be like, man, I tried to become a trader. It didn't work out for me. Why didn't it work out for you? Because you're chasing too much. So all this is just going to become a memory for you. Some people here, they're going to go off to become profitable traders. You're going to go off saying trading is a scam because you're too lazy and you're chasing money all the time instead of actually willing to learn. You know, being lazy is the #1 reason why most people can fail in a certain thing. Is just not putting in the work. You know, you think the universe owes you something? Man, the universe owes you nothing. It owes you nothing. The market owes you nothing. The market, even if it wants, it won't give you a trade, but just because of your own selfish needs, you're going to force yourself to take trades that you shouldn't actually be taking. So you're already, with that mindset, you're already at a disadvantage, sir. You are going to lose this fight. Come on, man. Hey Vic, did you see Ricardo's stream? Wait, Oh, damn, I lost that message. Not this Ricardo. Yeah. Ricardo stream. No, I don't know a Ricardo who streams. Hello, Charles. Thank you for the sub. I think you were meant to say Lorenzo's stream. Yeah, I watched a bit of it. I watched a little bit just to see how the guy's doing. Looks like it's still the same old concepts. That's wild. A whole year break. A whole year from trading live. That's pretty long. But I watched a bit of it. It was... You know, the thing is, I don't think too much of it. There's nothing to think too much of something, you know? Like, it's just a trading style. Just like many other trading styles. There's not much you can never really judge a system based from face value. There's always some kind of... There's always value. In the way people trade, there's always some kind of value that you can get from it. Remember, drink more water, chat. There's always some value you can get from it. Some people are too shy to talk about other traders because maybe they think it affects their brand, or maybe they just want to be the main character in this story. But I think like the more you understand people and different people in the same industry as you kind of like get better at what you are doing. You know, like for sure Elon Musk looks at other companies who are building rockets and sending rockets into space, because you know he's got to learn from them. He's got to see, oh, just the same way Apple looks at Android and Android looks at Apple. You know, they're always gonna see like, okay, how can we keep pushing the barrier? You know, like, okay, Apple's got this MagSafe thing. Okay, so how can we do for Android? Maybe now Android devices can also be compatible with Apple products, you know? And it's always like, oh man, I can't believe you said Apple in a Android showcasing, you know? That's like a cardinal sin to mention other people in when you're doing like stuff like that, you know? It's like Xbox, it's like PlayStation talking about Xbox. It feels weird, but like, it's normal. It's normal. Like people borrow from people's ideas. People build up upon people's ideas. That's just how you get better. Like even if I trade TFX concepts and I watch somebody else's stream, doesn't mean that I want to trade like them. It just means like, okay, maybe, you know, maybe if I'm put in a situation like this, I can now have a perspective of different psychology of traders. You know, and that helps me understand my trades a bit better too. So that's how I look at it. You know, just the same way professional athletes like UFC fighters, you look at different UFC fighters' techniques. It's literally the same thing. The problem is if you have too much of an ego, then you don't even want to accept that you know other people. And we got like a small little consolidation situation happening over here on the 1 minute, but it's looking like really choppy. It's already filled up most of this range. I believe that's 65, almost 65%. Oh, actually no, it still had some space to move. It still had some space to move up. 4 minutes till 15-minute closure. Washington say, first of all, I don't know if you know how to read, but it says, this ain't a shouting match. Stop spamming caps. And then you still spam caps. And let me see what your response is. We are not lazy, bro. Who's we? There is no we. I was talking about you and specifically you. There is no we. We does not exist. When you go to bed, we're not going to bed. You're going to bed. We're not lazy, bro. We watch your stream to get some money because we are doing jobs and we are learning trading as well. But that's exactly what I mean. Why are you watching the stream to get money? This is not a casino. You know, this is a place where you can learn the skill for yourself and you can make the money yourself. I mean, isn't that so much nicer than relying on somebody to make the money? Like, you know, I get the whole idea behind signals and stuff. Like, I still provide signals, but also the whole point of the signal is also so you're understanding the flow, the times that I'm taking the trade, the types of trades that I'm taking. So you're more locked in. You know, you're more locked into the process. Because some of you just watch the stream. You only see me on stream. Some of you don't follow me on social media or anything. You only see me here on stream. So you're missing on like 90% of the other stuff that I'm doing. You know, so there's always like more. There's always more value than just wanting to make money. I get the idea to wanting to make money, but if you're just here for that, you're not gonna go far. Nobody who's ever done it for the money has ever gone far. If Elon Musk was doing it for the money, he would never have started a new company. He was already like worth $20 million when he sold PayPal. Why the fuck would he need to keep working? Why do all these people you look at keep working? People who want Bugattis and you're like, oh, I want a Bugatti as well. Oh, this guy is so cool. He has a Bugatti. I wish I was like him. Why the hell do you think he's still working and you're sitting on your ass watching him drive a Bugatti? It's because it's not meant for the lazy people who just chase money like you. Because if you had the Bugatti, you wouldn't work anymore. You probably just like stop life. If someone gave you like $10 million, you'll probably stop life. But that's the difference between you and people who actually get that stuff. There's people like when they get that stuff, they keep working because that's who they are. And that's why they deserve it, you know? So that's why I mean, it's like, stop being lazy. Just put in the work. It's not rocket science. Like the more work you put in, the luckier you get. The more you show up to something, the better you become. So it's going to look like overnight. So once you do find your success, it's going to look like overnight. But people are not going to see the actual work that you put in, you know, and how much you deserve what you deserve. So it's simple, man. Change your mindset. Gold rallying tied to haven demand may keep going. Gold surge in recent days to new record high. Okay, it's mostly likely due to safe haven demand. This is likely tied to concerns of a Fed independence and legality of US tariffs. Let's see, demand for precious metal as a haven for investors is notoriously difficult to predict in respect of timing, duration. Oh wait. Demand for precious metals as a haven for investors is notoriously difficult to predict. There's that word, predict. In respect to timing, duration, and price impact. A price around 36.50 instead next quarter is now a real possibility. Next quarter, around 36.50 next quarter. That's gonna be next month in October. 36.50. I think we could get to 36.50. Man, well, I think maybe even before next quarter, 36.50. Because if you measure this candle here on the previous daily, we could already get upwards. If we get a day like that here today, we could already be at like 3,600. But that's why I noticed, like with this trading view, whenever they give these numbers here on trading view, the psychological marks, these are pretty valid, like, you know, 3,500. But usually the market tends to bypass those quite a bit. Like on trading view, they make it kind of tighter. But if you look at the technicals, we can't even get above 36.50. We can get like 90% there if we get a day like yesterday already. Can you demo your strategy? Yeah, we can demo a strategy. We're gonna demo a strategy as well this weekend. I think we should do another simulation. I want to show you all the MT5 simulator. But we could demo it. Like if you wanna watch some videos, you can watch the last demo that we did. This was the last simulation that we did. This was my best ever simulation. My best ever simulation. We did go heavy on the last trade though. It was like 5%. But we still ended it off here at like 21.95%. And in the last simulation we did in the mentorship, we did about 5%. That was kind of hard. So you never know. With simulations, you never know. When you pick like a random date, sometimes you get really good market conditions. Sometimes you don't get good market conditions. But I think on this day, we got really good market conditions. And the MT5 version of this, it looks so clean. Like I think Dominion Markets has one, like MT5 simulator. But this one from TetraFX looks even cleaner. It was a recent thing that came out too. So watch this video. Because I can't demo the market now because this is real time. It takes time for things to play out. Exactly, that helps you see trading from a different perspective and help you build your own style of it. Yeah, exactly, Tarek. And you know, it's the same idea behind the live streams too. It's because now you're seeing from a different perspective. It's something that you could have missed out on before. So now you're going to see it here and be like, oh, okay, that's interesting. And then next time you're trading by yourself, you're going to look at it and say, you're going to say the same thing. You're going to be like, oh, okay, so this is something maybe I did not know of before, but now you know of and you see the probability of such a thing playing out. And that all contributes to your edge, you know, and it all just comes from knowledge. Like once you know something, you get really good at it. You see, that's the power of knowledge. If you're looking for just the signal itself, that means you're stuck here. You're stuck here. You will never be able to replicate this. Because you're always just waiting for entry. Where's entry, sir? Where's stop loss, sir? How about how to trade this, sir? My strategy is different, or see this go buys from yesterday. But if you come onto the Discord here, you can get you can at least get the SMAs. Hey, Soysick. Hi everyone, Soysick from the UK. Histotechnologist. Trading, here to join the community. Welcome, Soyski. What is a histotechnologist? Let me see what that is. A laboratory professional who prepares human, animal, and plant tissue samples for microscopic examination. Interesting. Yeah, if you come onto the Discord, you can get the SMA indicator here. So these amazing for volume awareness. That's all that it is. It's just a volume awareness tool. So let's see if we got any SMA confluences on the 1 minute. Here you got the 8 SMA. Okay, here it had the 8 SMA as well. So you see like how we're trading underneath our SMAs. This one we almost got a crossover. We did, but it was within the range. It was kind of nice because we're above it though. We're below it as price was breaking below these lows. So, and then the moment you start crossing above it, you see the moment you start crossing above it, you can also expect some sort of like change in character. So I think that also lined up beautifully here. Break of the highs, this little consolidation. This also had kind of like a little fake out situation that happened. Below this support area. Little fake out, but also a little accumulation. Break of the highs, 8 SMA. Beautiful. Also one over here as well. Really nice. You always want to be, you see, and then you cross it. And this is what happens when you cross it. You're expecting more of like a push. So that's how you use SMAs, just like a quick tutorial on volume awareness. Man, but we didn't get any SMA crossovers. So if you get the mouth of the SMA, it look like this, and it crosses over, usually is the best, one of the best signals you can get leading up into your trade. So if you got, for example, SMA cross like this, man, those are usually really bomberclot trades. But yeah, right now what's happening is gold is ranging. So you got this area over here. This is becoming a no trade zone. No trade zone. And the reason it's ranging is because it's at all-time highs here by 35.46. So for price to continue moving upwards, it needs to accumulate more orders and then break above. So as we head up to like 35.46, there's going to be a accumulation and then distribution. It's breaking from this region here as well. So you see, majority of the time in that perspective, markets are just ranging. You see, you catch these really nice moves on the intraday timeframes, but see, it's really, in the grand scheme of things, it's not really gone anywhere. So you got range here, liquidity grab down over here, it's broken into another sideways channel. Looking juicy to raz on 30. I would buy here if bottom wick form first. I feel like the buys are done. To be honest, I think the buys are done till a different time. It's like 5 a.m. It's going to 5 a.m. Eastern. Then in the next hour, that's going to be the pre-NY candle. And there's going to be a higher chance for any sort of breakouts from that pre-NY time. However, what we've been seeing is 2 hours at least into the New York session. That's when distributions are coming in. So you're going to have a higher probability of catching it actually a couple hours into the New York session. But just generally speaking, I'm always assuming that the pre-New York or the pre-London is the start of the move. Because most time, like throughout the whole year, that's when you're going to have a higher probability of starting moves. You know, it's only right now there's a lot of bullish exuberance that's kind of making the market move it slightly a bit differently. Like obviously market's not usually moving like this. You see how bullish it is? So it's not usual market conditions. That's why my pre-session trades as well are not really like they're not really following through with directional bias. Like sure, they're still pushing. They can still push, but it's just you're not expecting like a solid follow through. Maybe you'd expect more of like a reversal after this, something like this even. Whereas for the most part, I think this year we would be expecting price to just keep flying during these times. But you see, it's like you can still get decent pushes, but no follow-throughs. Just much like what we've been dealing with the London session. But at least the pre-Londons have been a little bit better for me. Yeah, it's kind of interesting because when price is moving like this, typically what people think it's like easier to trade. And in hindsight, it looks easier to trade because it's very like directional overall. But it's actually been the most difficult to trade, which is really paradoxical. Because sometimes you get like these ranges sometimes are easier to trade than when even price is trending so heavy like this. But if you're a higher time frame trader and you just hold your positions, you get away with them a lot easier. Because if you look at the daily, and daily has just been moving up. But inside of these daily candlesticks, there's a lot of fluctuations that happen, of course. You know, so in hindsight, it always looks easy. And that's why trading in hindsight looks easy. But when you're actually doing it, there's a lot of like fluctuations and certain things that could happen. That's why when you do your back testing, you know, that's why we show you how to do back testing. That's why when we do that simulation, we show you how to do the simulation. So you can see for yourself how you can get the most accurate representation of forward testing possible. So it's really important to show up to those simulations. I understand people don't like showing up to that simulation. I understand that most people are lazy and they would only come for signals, but that's fine. But you know, we still do them. We still do them for the select few people who actually want to learn. Because if you see the differences between my live stream views, you see difference 3.2k, 2.5k, 3.2k, whatever, And then the difference in the other additional stuff, you gotta get like 300, 157, and then you got like the simulations here only like 800, 800, 700. Like majority of people would not show up to these other ones. You see this? How I catch impulse entries before the big move. 440 views. But to watch it in real time, you're gonna have way more people. And you know the funny thing, this happens during times you can even watch this like literally anytime. Anytime. People will chase a signal in the middle of doing their work. You know, and that should say a lot about your psychology as well. Why are you chasing, some of y'all chasing signals in the middle of doing actual work when you could be learning this at your own free time? And then it's literally the same thing we speak on stream is what's been broken down here. But those have the less amount of views. You know, that's why I tell you, like, on your journey, don't worry about the statistics. Majority of people are just not putting in the work. That's why there's such a high probability of people failing in this industry. So don't get discouraged by the statistics. For those of you actually putting in the work, it's just a big statistic because a lot of people try it and they're chasing something. And that's why it's such a big statistic. But if you really want it, if you put in the work, it's that simple. And I'm showing you evidence of that. I'm literally showing you evidence of that. That's why when you start this trading journey, a lot of people are going to tell you that it's super difficult. You know, most people are going to reflect on you what they think that they cannot do. That's what you get. When you start telling people about, oh, I want to become a trader, I want to start making money doing this, most people will reflect on you their insecurities, because that's what you're dealing with. Majority of the people, not to hate on people, I'm just saying majority of the people, that's why not everybody is, for example, an entrepreneur, or, you know, some people just don't want to do it, and that's fine. That's their perspective. They will tell you it's risky because that's their perspective 100%. But whatever decision you choose, you're both right. You know, if you think it's too risky, they're also right. It is risky. But if you think you can do it, you're also right. You can do it. So both of you are right. So you just want to choose which right do you want to be at the end of the day. Like, let's say if you're too tired and you don't want to go to the gym, you're right. You are too tired in order to go to the gym. But if you force yourself and you say, no, I can do it, you're also right. You can do it. You know, like a lot of things, also trading is just a psychology thing. That's all it is. You already have to believe that you're something before you're that thing. You know, if you don't have that delusion in you, how do you achieve certain things? How do you believe? You know, some of you believe so much in your religions. You've never seen God before. Maybe you've seen him in your own way. You believe so much in your religions, something you cannot see. You cannot see this, but you believe in it. But you find it difficult to believe in other things in your life. You know, but if you had that same belief system, you will achieve majority of the things you set your mind to. Because everything starts with a vision. And then it's only when it actually happens, people will be like, oh, wow, he actually did it. You know, it's because God gave you the vision. He didn't give them the vision. He gave it to you for a reason, because he said you have a higher probability of seeing this vision through. That's why you've been given the vision, and that's why your friends didn't get the vision. You know, so stop trying to share your vision as well to people who are not yet deserving of that vision. You know, then you're gonna give yourself a headache. Because that's what happened, you know, for me, especially first year, I wanted to share the vision with everybody. Everybody, I wanted to share the vision, but it was not clicking. It wasn't clocking to anybody. You know what I was saying the whole time? It's only when you make it, it starts to clock. But even now, it still doesn't clock for some people. What do you think about Islam? I don't think much of it. I think it's good, just like any other religion. You know, I think religion is really nice for people to find. You know what religion does? Religion grounds people. That's the importance of religion. It keeps you humble. That's good. Keep the sauce for the willing. Yes, sir. Plenty of sauce to go around, but hey, Mueller, thank you for the sub. Where do you think you'll go from this consolidation? I think that price will move up today. That's what I think. Price will move up. Where I think it's gonna go from this consolidation, I don't know. I don't know, because you know, like, let me show you exactly why it is that I don't know. So there's this video I wanted to share with you guys from the beginning to executing my trade, and how the trades sometimes, you know, they change. Like when you come onto the chart, you sometimes think you're gonna do one thing, but based on the market conditions, you're gonna do something else. So you see this trade, for example, I was looking for a sell, correct? I came onto the chart, I was looking for a sell. I thought I was gonna take a sell. We had beautiful clean range on the downside. I was looking for a sell. But then, you know, as price progresses, now I'm thinking, you know, maybe the buys look good. Maybe now the buys look good. Maybe a break above here, the buys could be looking good. And then as the price is progressing even more, now I'm looking to see, wait, where's this? Yeah, you see, now look at the sell. Now there's another interesting sell happening, even closer. You see, it's jumped from here. Wait, let me change the color of this. It's jumped from here to here to here, potentially to here. Because every moment in the market is unique. So it's only when the candles start to expose themselves a little bit more, you start to realize, okay, so what's the probability of one thing happening over the other thing? And you see, and then ended up taking a buy here. And then that was the move. That's why I don't know where price is gonna go now. So you must just let the market come to you. Hey, Arnest Ace, thank you for the sub, man. Sitting in my GJ buy and waiting either SL to be E or loss. GJ buy. Oh, just feel like there's a little dump due now. Yeah, I feel so too, you know, because this time is not really known for trending. So we might have a higher chance of a sell-off. Well, it's not known for trending, especially of late too. So I don't know, it's probably going to be short-lived any pushes, but we'll see. Yeah, at the end of the day, our job is not to speculate on the market or to predict where the market is going to go. We'll just wait. Whatever. If you're planning on executing and you see something good, then that's just going to be your trade. You might even still have a profit. You could even get a profitable trade. You could be right on the trade and wrong on the direction and still make money. You know, let's say you take a buy like this. Could hit take profits. You could still make money, but price could come back into the range. So you see, that's why I say our job at the end of the day is not really to predict where market's going to go. You just want to manage your risk, have a profitable trade, and you know, if it hits, it hits. Awesome. And maybe comes back in the day. Because you know, there's a difference. There's a difference between being right and trading to make money. A lot of people trade to be right. You know, that's why a lot of the time people sometimes are going to tell you like, I told you so. But you don't trade to be right. Actually, you lose a lot of money trying to be right. You lose a lot of money because now you start to ignore the fact that you can be wrong because you're trying to be right. Because you know, like what happens, let's say if I take a sell over here and then price moves up and then price moves up, someone can still say that was a bad trade because that was a counter trend trade. But no, you made money. You know, at the end of the day, that's the goal, right? You want to make money. Fine, I didn't get the full move. I didn't get the actual direction, but who gives a shit? You know, most of the time, you're not going to get the actual direction. That's why most of the time, your running trades are always going to stop you out. When you want to hold a runner, you're always getting stopped out. If this turns out to be right shoulder forming on 15-minute, it's gonna be wide right down. Yeah, we got left shoulder, head, right shoulder, then dump. It could be a pretty big retracement. That's why even this morning when we took the sell, like we saw so much selling pressure, because I was also looking at on the left hand side and we had such a parabolic move up. You know, so whatever sells that were coming in that were going to be valid and remain valid, they had a pretty good chance for a strong push like that. If it was going to be valid because of this parabolic move up. But if it was going to be a losing trade, then it would be the same reason. Is because of the parabolic move up. And obviously still a lot more bullish exuberance. That's why it's like anything can happen in the market. So you mustn't beat yourself up for being afraid of being wrong on a certain trade. Because if that was the case, I would never have taken a sell. If I cared more what people thought, I would never have taken the sell. Because majority of people will be wondering why you're selling when price is moving up. You know? So it's all stemming again from wanting to be right. Because, you know, the funny thing is, I've been trying to be right this whole time with these buys, but the buys are just not... I'm getting a few buys here and there, but they're just not playing out. They're not playing out. The only 2 sells I've taken this month so far, those are really good sells. You know, but the buys, they're not playing out as much as I want them to. Although price is moving up. But that's just me trying to be right. But I'm not making money on the buys. So I have to be open to counter trend ideas. You know, there are certain few things like this that we all struggle with. You know, and we all have our own demons. So you have to see what that demon is that's kind of holding you back sometimes. Because, you know, sometimes you're having like very nice analysis, but something's holding you back. And you got to see like, where is that actually stemming from? You know, for me, sometimes it's easy because I'm doing this on live stream. So I'm always thinking, am I just doing this for the live stream or am I doing this for myself? It's because I'm sending signals. I'm also thinking, am I doing this just to send signals or am I also doing this to be as authentic as possible to what I want to take? You know, but everybody has their own demons based off what they're currently doing right now. I think it's quite important. Advice on growing a small account. I think the small account is not to grow, but to learn. You know, when you have a small account, you're basically fucking around. So you can find out as much as possible what's working, what's not working, what's possible, etc. That's the idea of a small account because the barrier to entry in trading is very low. So you ideally want to take that advantage of having a small account. You know, think about it. If you want to open a car dealership, what's the barrier to entry to opening a car dealership? Or you want to open, let's say a gym. What's the barrier to entry to opening a gym? You're going to have to pay a lot of admin fees. You're going to have to pay employees. You're going to have to find a place to rent. You know, so the risk is already high. You're going to start with a high risk when you want to start that business. But entry to barrier to entry on trading is very low. So use that small account to your advantage. Learn the skill. Because the growth is also exponential. So you can pay a smaller tuition fees. And if you're profitable on a small account, you can pass a funded challenge and start compounding your personal account. You can get funded, you know, 50K, 100K, where 1% might even be more than that small account that you're trying to grow, which is going to be much harder than just learning the skill and then compounding your personal account. Because you don't also want to stay on a funded account, you know, because funded accounts, it's not really like, they're not really as nice as people make them seem. They're a lot more difficult to trade and there's a lot more regulations in terms of rules. There's a lot more rules you have to follow. Some of them are very sketchy. So the number one goal is to compound your account. Compounding is the number one goal in any sort of business endeavor. You want to maximize the ability to compound. It's one of the tricks to growth. Is compound, reinvest, compound, reinvest, same thing. You know, that's why Amazon was on paper unprofitable in the beginning years because they were reinvesting everything back into the company. So they were compounding, you know, and that adds up because now your company is going to grow even faster than you thought. You know, so that's a beautiful thing about trading, is once you start compounding your personal account, you start to earn your $50 days, for example. They quickly go from $50 days to 100 days, $100, from $100 to $200. That's the power of compounding, especially if you got a pretty nice salary and you work a 9 to 5, and now you're doing like a funded program and you're still growing your personal account. It makes it even more exponential. $200 days, $500 days, and so on and so forth. That's the idea. The idea is not to start here and try and get this to 100,000 or that what do you call it? Or that challenge that Alex G did where he turned like $100 into $1 million or something. I don't even know. That's not the idea. That's super unrealistic. You're better off just compounding it and keeping the risk in check. You know, because your mentality does a lot better risking 1, maybe maximum 3% per trade than it does when you're risking 10% per trade on a small account. Because 2 losses, that's 20. 3 losses, that's 30%, especially if you're not managing your risk. So it builds up psychologically quite a lot. And if you mess up the risk, you mess everything else up. This is your foundation. So everything you do from this point forward comes to risk first. You know, you can do it the smart way or you can do it the hard way. So, you know, you got a lot of options here. Define small account. It also depends where you live. You know, maybe if you live in an expensive place, $50 a day is not enough. But if you live in an affordable area, then $50 can stretch a bit longer. That's why, again, we say risk management is super discretionary. But the path is usually the same. Like you just have to choose the right path. The path is usually the same for everybody, right? We're all heading to the same destination. It could just look slightly different for some of us. You know, and it's the reason why I live in a third world country, not a first world country, because my money, it goes so much further than if I lived, let's say, in New York. If I lived in New York, then that means I would have to increase my risk, you know, just so I can keep up with that sort of lifestyle. But, you know, that's a beautiful thing about being a trader, is you get the freedom to trade wherever you want to trade. So you're going to earn, you know, the problem with people who live in New York, for example, earning a good salary, is they can't do that in a third world country unless their job sends them there. So it's really difficult to get that same country in another country. You know, so that's where the universe kind of like tells you like, hey, you're in this level, you can't get to this level because you're going to enjoy it too much. So, you know, you got to find another way. You got to find another way. That's why trading, man, you can trade and live anywhere. If that makes sense. You can trade, live anywhere, save a lot of the money. But, you know, that's a problem for another day. That's a problem for when you're already profitable at the end of the day anyway. Testing the lows again, maybe like yesterday before the big move up. But the idea of that was just to show you that you can be way smarter with your money and your plans. If you just set yourself some goals like that, I think trading becomes a lot more enjoyable than trying to force it. Because at some point, I couldn't force it anymore. Like if I was gonna force it, like low key, I would be super depressed. I would be so depressed. I would have lost so much money, and I would just be in a hole. You know, at some point you have to realize like you can't fight the universe. Like there's certain ways that you can go. If this door is not opening, why don't you try another door? You know, don't stop trying to bang on the same door. If it's not been working for you, just keep opening the smaller doors. Sure, this big door over here, that big door behind that door maybe has like so much money behind that big door. But there's another door over here which maybe has, you know, a small portion of that money. Maybe it has $100. This big dough over here has like, let's say 100K. This big dough here has $100. Just keep going through the easier doors. Take that $100. Just keep going through the easier doors that you can keep securing $100 until you're gonna get lucky. Because the more you put in that hard work, you're gonna eventually get into an easy door, which gives you maybe like, you know, hypothetically 20K or something. That's the idea. Like you want to go in the easiest route possible, because you're gonna have a faster time to actually excel than somebody who's trying to grow a small account. You know, because they're banging on this door. Imagine this. They're banging on this door the whole time. You're already like halfway in your journey, but they're still banging on this door. That's why some people get stuck, you know, 1 year, 2 years, 3 years, 4 years. They get stuck banging on the same door. They make small improvements every now and then, but they're still sort of like in the same area. And you know what how I learned this skill was from visualization and creating dream boards for myself. Because whenever I read that book, The Secret, I started creating these vision boards. And on those vision boards, in the beginning, those vision boards were really grandiose. You know, they would have like a Lamborghini on there, a freaking mansion on there. Like you would have all these grandiose ideas. Man, those ideas take super long. They're going to take you so many years to achieve those ideas. And then I started realizing, okay, so this is how a vision board should actually work. Set yourself goals you can achieve months from now or even within the year. Because the more you start ticking those and start opening those small doors and ticking those things off the list, you're still heading in the same direction, but at least you're actually getting shit done. You know, because what happened is you have these big goals, they're so unrealistic that you don't even want to do anything because you know it's going to take time. So that's the idea. And it feels really good achieving small goals like that throughout the year. So every year I have a vision board, and at the end of the year, I gotta see how far I've gotten on that dream board. Because in a whole year, you actually don't do as much as you think you do. If you start developing a dream board, like an actual one you've thought through, you can achieve a lot, but maybe it might not be as much as you think. So you have to be really realistic and have a plan towards the final goal. Trust me, it is nice. That's why compounding is important, you know. Get those small wins in under your belt. You're gonna feel really good. And every single day is an opportunity for that. For working towards your goals. Grabbing the liquidity. Yeah, it's struggling. Now, you know, a breakout like this would have played out more, like typically speaking, in the next hourly candlestick. With a pre-New York volume, a breakout like this. But with current market conditions, a breakout like this, most likely in New York session, to continue creating all-time highs, because all-time highs are really not that far away. We only need to push up like, you know, 77 pips, create all-time highs. Kind of struggling a bit here. If you look onto the left-hand side, you also got massive rejection wicks. 1, 2, 3, 4, 5. Yeah, a few more rejection wicks here. If gold continue to go up, how far you see it going? At least all-time highs. At least, again, obviously all-time highs. Next psychological mark, we can say maybe around 35.60. So that's just about 200 pips from where we're currently sitting. Testing the lows again. Maybe, okay, yeah, maybe like yesterday before the big move up. Anything like what we've been seeing, chat. Like if you're trading the New York session, because some of you rather trade the New York session. 2 hours into NY, just expect any big moves. I wish it was happening for pre-New York. Search of a Dream. Thank you for subs. Can't be too married to daily bias. Learned it the hard way. Goal itching to make another ATH today. Yes. GJ now to BE. Sweet. Now it's either BE or TP. I would love a dump to 35.34 or 35.30. Man, look at GJ here, running up towards 200. This is what GJ's been looking at. It's about 70 pips away from where we're at. So look at this. If you said you're in a GJ buy right now, you've put yourself in a really nice running opportunity, because I think you said you're probably somewhere sooner. You probably got it somewhere sooner, imagine. So if you get a trade like this, and you know, this is what was explaining yesterday. Also, when Jay was asking about how to leave runners, this is what we mean. Like, you see, this whole space that price has to move. If you're already stuck in, you close a partial of your position, you have so much room to move up here. So much room, and you got 200 as a psychological mark as well. So, you know, like, there's no structure that GJ can have reaction of. Obviously, market's not perfect. It doesn't always do this. Otherwise, everyone would be a millionaire if that was the case. But what it is it just increases the probability of price playing out like that. You know, don't get too overly excited. Like, we talk about this clean ranges, and we usually see them get filled, but it's definitely not 100%. But you see these beautiful situations like this. You get like clean range, and they just get filled. It's basically the same idea happening on GJ right now on a much bigger scale. See, this is a smaller version of what's happening on GJ right now. That's happening over here. So it's a really nice probability to have in all your trades. You know, it doesn't matter if you trade SMC or ICT or whatever abbreviation is that you trade. They can all benefit from a clean range. And that's a foundation perspective. You know, this has nothing to do with anybody's strategy. Nobody made this up. If you're under the illusion that somebody made this up because you think this person was the first one to start trading, you're grossly mistaken, because the market has existed way before that person was even born. Way before the universe even thought that person could be born. That had already existed in the market. You know, so you got to stop this. You got to stop this behaviors of saying, oh, this is similar to this guy, or this similar to that guy. It's similar, but it's not because you're copying from them. It's because the market only moves in 3 directions. It moves downwards, sideways, and bearish. And every time there's a distribution, we can always get into the trades like for a different reason, but in the same area as well. You know, because we're just trying to catch that move. Everybody is just trying to catch this sell here. Everybody is just trying to catch this buy over here. And there's a finite way that you can read structure that you can actually catch these moves. You know, so never think like just because you've seen it from somebody else, like clean ranges, you're going to say, oh, you know, you took it from this guy, you learned it from this guy, because that's just not the case. If you are trading alone, given the right amount of time, you would see these patterns happen over and over again. And then you kind of like put it inside of your strategy while you're building your edge. But there's a finite amount of ways you can catch. You know, like for example, if you think about this buy over here, you know, we could have all caught this distribution. I could have caught the break of the highs, but then maybe someone could have gotten based off some smart money concept like this. And you could even have a point of control. Let's say you even have a volume indicator here, and that volume indicator is showing you something of the sort. You say it's like you just decide how you want to catch that move, because at the end of the day, it's still the same move. You know, do you want to catch it using complicated ways, or do you want to catch it using simple ways? At the end of the day, price is still going to move. Correct? Price is still going to move. Are you streaming tomorrow or still Thursday off YouTube stream? No, we're streaming tomorrow. 0 drawdown 2, which was perfect for waiting for BE or TP. Yeah, that GJ looked really clean. Gold right now is super choppy, you know. It's just consolidating heavy over here, so gold needs to stop moving. And it's a lot harder to catch a move inside this area like this. It's usually the case, you know. That's why we trade the London Open, because with the London Open we can expect a bit more cleaner volume. And then as London progresses and we've already had some volume, it's gonna range, because the market can't always keep moving. All right, so that's why we specifically come here. And if we get the volume in the get-go, in the beginning, then there's a chance that price ranges as it sets up for pre-New York, which is going to be in the next 30 minutes. Then we're going to start to see some moves again. So yeah, timing, I think timing is super important. Like, even if you just understand time, you can already start to have some kind of more winning trades. You know, if you just understand time, you're more willing to execute on your positions. I think one reason I used to struggle with execution, actually thinking about it now, is because I didn't understand the time. I didn't understand like how price actually should move during this time. So I'll be trading exactly at this time, for example, and wonder why we're getting low volume. So you kind of want to always align yourself. So when you're doing your backtesting and the times that you have to trade, kind of align yourself with the hourly candles, see how they're really moving during that time. You know, but just as a rule of thumb, most of the volume comes in pre-London, London Open, and usually just for like 2 hours. I would say a duration of 2 hours. So you got like pre-London, London Open. You got pre-New York, New York Open, NYSE, London Close, and that's it. And it all behaves kind of differently. You know, like that London Close volume, it's kind of like end of the day volume. Correct? Of late, the New York volume has been kind of the trending volume. So sometimes it acts kind of differently. The volume comes in kind of differently. It feels different. It's hard to explain it, chat, but it's definitely a difference. Like, people who trade New York, they usually expect price to move in a certain way. You know what I mean? And like London session, you expect a certain kind of move, a certain kind of push. So if you understand the time that you're trading, and this comes down to you too, you got to put in the work. You got to look at that time for yourself and how you're trading that time. And you got to better understand it. Like for me with the pre-NY trades, they're very impulsive. I can take a buy, I can take a sell, like very impulsively. Because I know, especially at this time, there's going to be volume, whatever it is, a buy or sell, counter trend or with the trend. I can at least get a push from it. You know, with something like the New York, maybe if I was trading the New York, what I'll do is I'll try and focus on the daily, where I think more of the daily volume will be going. I think it will keep accumulating until Joel's job. Yeah, I wanna take at least one more trade here today. One more trade. They got pre-NY in like 30 minutes. See, it's setting up. I think the longer it sets up, the better, because most people get stuck here. So you see how you use time to your advantage? Because like when I take my pre-session trades, I'm not even on the charts most of the time, not even for an hour. I get my trades in the first 20-30 minutes. I tend to get them quite early because you've perfectly timed, so you're reducing as much wastage as possible, because most people are going to be stuck here, and when they're stuck here, you're doing something else. You know, you're more free, you have a lot more time to do stuff, and then you come in when the move is supposed to happen. And you know, they've been waiting here the whole day, they've been a slave to the market. Well, you've been chilling and you just came, you sat down and you took your trade and you're already done. You know, that's the idea. The idea is not to sit around and wait just for the market to give you a setup. Is to have a time that you're actually trading and then sticking to that. Because like, let me be real, guys. If I was not streaming right now, I would have already been taking my trade and I wouldn't even be looking at the charts until in the next 30 minutes. You know, and because I know in the next 30 minutes, there's a higher probability when I do come and sit down that we're going to be ready to have a move. Check trades taken. Oh, nice. Wow, look at that. Yeah, I just got back from doing chores. Efficient time spent doing chores, because you see, you didn't miss anything. You didn't miss anything. Price has just been ranging here inside this like 61 pip range. Let's see if this has legs. Oh, maybe we can draw some legs over here. We can start running. There's a gold sells. Run.
Why are you running? Why are you running?
Hey, Rupesh, thank you for the sub. Timing, yes, one of the most important confluence. You just scalped a short. What country do you live in? What are you, the IRS? You gonna come after me? No, I live in Wakanda. I'll do more. Okay, guys, we'll have a deal. I'll make more. I'll put effort into making more videos, like vlogs, but just not some useless vlogs, because you know we're all here to learn how to trade, but just some vlogs so you kind of better understand the environment that I live in. And we're gonna have like a good vlog where we're gonna talk about psychology. So they're gonna be trading psychology vlogs. So you know, you got something to look at, and you can also just listen to psychology, because I think a lot of people appreciate psychology. There's a lot, you know, there's so much technicals that we can do. At the end of the day, like, psychology is kind of what you really want to focus on too. Because it's the difference between you being in this game for long and you being in this game today and out tomorrow, is psychology. Because it doesn't matter how good of a trader you are. If you have a shitty psychology to risk your whole account, you know, on a dumb shit trade towards the end of the year, then there's no point even doing this. You know, why even be consistent? Why even show up to the charts? If you're able to blow your account, what's the whole point of this? You're just wasting time, you know? Like, imagine all of these mornings. Look at all these trades, because every single trade I take, I journaled and I put up before and after picture. I put up before and after picture here in my Discord, and you can see the position, you can see everything. Imagine doing that for the whole year, to waste all those hard works, all that stress, all those mornings, just to give it all back. You know, there's no point at that point. So if you don't got your psychology clean, then or right, then you know why even bother? Because you can take so long to build something really nice, but ruin it all in one day. It's just the same like any business. You can build the best business, you know, and you have that go for like 20 years, and in one day you can ruin it. So there's no point if you don't have a good psychology. So we'll do that. We'll do that. I don't know when we'll do it, but it's something definitely I want to start doing soon. Good morning. Good morning. You need to buy or sell now? Yeah, I think I just need to wait now. That's what I need to do. I need to wait. You know, sometimes I even see trades come in before we start stream, but just because of my rules, I still wait. I still wait to make sure I take the trade that I need to take during the time that I'm trading. So even if I see a trade right now, I'm not going to take it. Even though this accumulation here looks beautiful, I'm not going to take it. I'm going to wait. Hey, love from India. Thank you. Yeah, we got sit on our hands. Let's see, hourly. Feels like the buyers might be getting a bit nervous here, because every time we create a new higher high, price tends to pull back. So pull up, create new higher high, pull back, pull up, create new higher high, pull back. Love the psychology stuff. It's a struggle area. I imagine like it's still like people who are very well experienced in this trading game are also dealing a lot with that psychology problem. Like there's one nice video. Let me see if I can find it over here. Let's see, psychology. Yeah. There's this video. This guy talks about psychology as well. Let's see. I think he worked for some kind of institution, if I'm not mistaken. I'm not sure exactly. Let's see. Opto brings you the first installment of trading psychology. Normal doesn't make money. Expert stock market trader. This is Tom Hugard. Attempts to change the way you think about. I watched this a really long time ago, but if I recall, he said something like he worked at institutional or something like that. Don't quote me on this. I don't know. I don't know who this guy is, but if that's the case anyway, you know, the way I approach things in life, I'm very cynical. I don't just believe things that people tell me. So I'm just looking at the value. I'm trying to say, okay, so you know, if he is actually working at an institution, for example, and he's telling us the story, you know, there's something I can still learn from that, you know, because it's also not just all made up. Like these are problems that people actually deal with. So, you know, in this little segment over here, he talked about how he had a really good run, and towards the end of the year, before the Christmas holidays, he made some really dumb shit decisions in the market that he really regretted. You know, even with all the years of experience, he was still prone to making these mistakes. You know, he's still prone. Then you really question yourself. You know, when something like that happens to you, you really start to question your character. And you wonder to yourself, like, how could I have allowed something like this to happen? You know, and then hopefully that never happens again. But this is a very good talk here on psychology. I think you could still benefit a lot from if you haven't already watched it. You know, that's why it's very important to be cynical, you know, with yourself and with things in the world. But especially with yourself, you know, because we tell ourselves these things that we kind of like make them sound good in our head, but, you know, sometimes it might not be the right thing for us. You know? Talk has a book, Best Loser Wins. Yeah, so you gotta get really good at second guess. And you know, that's what actually makes a good podcaster. Like, you know, some of these podcasts that you listen to, you have to be willing to play the devil's advocate to be a good podcaster. So you can't just go in with your own preconceptions about what you believe. That's why for me personally, I love podcasts like Joe Rogan, because Joe Rogan is really good at doing this. He's really good at playing the devil's advocate. You know, Joe Rogan, for example, is this one guy who he freaking believes in aliens, right? But at the same time, he's conscious enough to understand that as much as he wants to believe in them, he knows that there's a lot of bullshit out there. So, you know, he's also very cynical. So it's a perfect balance, you know, it's a perfect balance, that podcast. And that's why it's one of the biggest podcasts, if not the biggest podcast on YouTube. And, you know, it's a skill. It's a skill to be able to audit your thinking like that, especially in real time. You know, sometimes you got to do that in trading too. You might marry a bias too much, so you got to play the devil's advocate because no one's going to play it for you. You know, so I think it's really important. Super important. Hey, Rainsy, good morning, good morning. Nice to see you in here, sir. 100% right, but hard to control. I set a reminder that ring every 30 minutes. Oh, that tell you not to FOMO? Yeah, that's how people, like, you can do that, but at the same time, it's like, audit your thinking. Why do you need a reminder? It's good training wheels that every 30 minutes, you're going to get a reminder that says don't FOMO. But to be honest, you just need discipline. And I get it. It's very difficult. Like, you have to go through the stages. I fully understand that. I used to have sticky notes which used to say, wait for candle to close with exclamation marks. Like 3 exclamation marks. Like, wait for candle to close in all capitals, exclamation mark. Because it's very difficult to change your behavior. If you've been doing something for a long time, it can be very difficult to change your behavior. So I do get that. But the idea is like, you want to remove that, because that's also taking capacity in your head. You know, always having to keep in mind that FOMO thing or that wait for candle to close. It's taking up space in your head. You know, this should already be like second nature. That's why in the beginning of everything you do in the beginning, it's always taking capacity in your head. Like every time I'm playing a new video game, I gotta really think, especially if it's a very detailed video game. I always gotta think like really hard about certain things that I'm doing, you know? And then you start playing it a bit more, and then it becomes like second nature. It's like you already know what everything is, and you're doing it almost without thinking. So that's the level that you want to get to. So at the same time, you also have to keep that in mind. As much as you got these little tools, you know, some people use tools to lock them out of certain apps and stuff. You're working your way towards actually taking control of your own psychology. Because if you need a tool to lock you out of an app, you know, what the hell is that? Why do you need a tool to lock you out of an app? Like, where is the discipline? You know, where is the discipline? Kind of operating on autopilot. Man, you would be surprised the amount of people who operate on autopilot. Like, it is crazy. It is crazy. So we are all falling victim to this. So we have to be very careful about the things that we do and the way that we talk about certain things in the market. You got to think about it like a laboratory, right? So in a lab, you want the lab to be as clean as possible, as tidy as possible. So you can really study like a lot of things. It's basically a science, trading. So you got to treat it like a science. Don't treat it like a get-rich-quick scheme. Don't treat it like gambling. You got to treat it like a science. Because you see this over here? You see how I had 3 back-to-back losses? Man, this happened because of a bad habit. First trade was a gamble trade. Second trade, I went against my rules. Third trade was just oh yeah, yesterday my psychology was fucked. Yeah, third trade, I got into the trade late. Third trade, I got into the trade late. It already kept moving, but I was like, okay, you know, it's a pre-NY time. It's probably just gonna keep moving. So I got into the trade, but I got into it late. That was a problem with this one. So yeah, I mean, you see, it stands out, man. It stands out. It really stands out, and this compounds over time as well. You know, like bad habits like that, they compound over time. That's why I'm saying you gotta treat it like a laboratory. So you see, you want to have it like as clean as possible. As clean as possible. You know, where the results even are making sense. The results are making sense. But if you don't do this, it's going to be a bit more random. And that's why I always say, like, stick to 1 or 2 trades a day, 3 trades maximum. I'm just going to start saying 1 to 3 trades a day. 1 to 3 trades a day. If you got a losing trade and it's past your daily limit, then just call it a day. If you got a losing trade, you manage your risk, then you have more space to take other trades. Hey Faisal, good morning, good morning. 50 SMA, keeping it up. Yeah, I got 50 SMA. You see, it's still ranging here. This is something I'd expect to start moving on the next hourly. Next hourly candles. My GJ out at BE, missing TP by 8 pips, but I'm not salty or get into revenge trading. Stuck to my plan. I've been in the trenches, but sleep better. I stick to my rules. Let's go, Mark. Oh yeah, it's already come down. It's retracing. The problem is when my capital get huge, making me want to make it more in shorter time, and once I have this mindset, I'm immediately blowing the account. My capital was $600. I made it 1,800 in just a week. Once I had the wrong mindset, it went to $18. It's easier to do that than it is to get it up. I agree. Everything that's not super good for you in life is typically on the easy side. You know, eating unhealthy feels so good, but it's not good for you. Smoking that cigarette might feel good, but it's not good for you. Drinking might feel good, but it's actually not good for you. Everything that's good for you is always the hardest thing to do. You know, having an open mind with people can be sometimes very difficult for us. You know, instead of listening to respond and then just listening and just listening and just playing devil's advocate at the same time can be difficult. It's difficult not to get emotional about certain situations. You know, the good things are always the hardest things, like emotional intelligence be very difficult. But you know, these things are improved over time. You know, they're improved over time, and we all face these challenges. Every one of us faces these challenges. But the idea is not to be perfect. The idea is just to get slightly better each time we're given a challenge like that. Because if you ask God for patience, he'll give you opportunities to be patient. You know, so it's all about the mindset. I like that scene in Pursuit of Happiness when Will Smith's kid is telling his dad that when there's this guy who was stuck in the ocean somewhere, and every time God would send him a boat, but he would be like, that's okay, God's gonna save me, or something like that. And then God would send him another boat, and he'll be like, that's okay, God's gonna save me, and something like that. Then he ended up dying, and then he went to heaven, and I can't really fully exactly remember what the kid was saying, but it's smart. It sounded really smart. Like, God will give you these signs, and sometimes we're just so oblivious to them. We're so oblivious to them, you know, and those are the opportunities that he's giving you. So every time you think like you have such a hard life, you know, oh, my life is so hard, that's just an opportunity you've been given to have the chance to at least work on your mindset when things do get difficult. You know, are you going to fold under pressure? Are you going to build newer habits under pressure? But yeah, I appreciate you all tuning into the stream. Anyway, I think this is the first distribution into pre-New York. So we still have about seven more minutes till the new hourly candlestick opens. But I'm gonna head out here, guys, and I will see you tomorrow for London Open. Adios.